This is an Uncovered Japan company research report on Hirose Electric, ticker 6806. Hirose is Japan's pure-play connector specialist, supplying the tiny parts that link circuit boards, devices, cars, and high-speed data systems. This video follows the published research through the product, the financial engine, the strategy, and the valuation risks. It is for information and education, not investment advice. At the report's 17 July 2026 reference date, Hirose traded on 26.7 times trailing earnings, with a 20.3% operating margin, 8.8% return on equity, and roughly 232 billion yen of net financial assets. The combination is unusual. The core operations are elite, while the overcapitalized balance sheet keeps returns lower than the operating margin would suggest. The market has recognized much of the quality, so growth delivery and capital efficiency. Hirose sells connectors, deceptively small parts that join one circuit board to another, or one device to the next. Its focus is not commodity metal parts. It competes in small, high-frequency, high-speed transmission niches, where design precision, signal integrity, and manufacturing yield matter. The company makes roughly 100,000 product types, including board-to-board, flexible printed circuit, automotive, and coaxial connectors. In April 2025, it launched the FH80, described in the research as the world's thinnest connector, at 0.44 millimeters. The segment mix is the key to the forward story. Multi-pole connectors represent 88% of sales and earned a 19.8% operating margin in FY 2026. Coaxial connectors were only 9% of sales, but earned a 32% margin. Revenue grew 34.2% and operating profit grew 73.9%. That business serves high-frequency and optical transmission demand, including AI data centers. The smaller other segment grew quickly after the SER Semiconductor Test acquisition, but earned only a 5% margin. Revenue rose from 133.5 billion yen in fiscal year 2021 to a record 211.3 billion yen in fiscal year 2026, a roughly 9.6% compound annual rate. Yet, fiscal year 2026 operating profit increased just 0.8% to 43.0 billion yen, and margin declined to 20.3% from the fiscal year 2023 peak. A stronger yen and higher raw material costs raised the cost of sales. The lesson is clear. Even a high-quality connector maker remains cyclical and exposed to currency and input costs. Hirose's balance sheet is exceptionally strong. At FY 2026 year-end, cash and investment securities totaled about 238 billion yen, and net financial assets were about 232 billion. The equity ratio was 87.7%, and interest-bearing debt was effectively limited to lease liabilities. This protects the company in a downturn and funds investment, acquisitions, dividends, and buybacks. But it also leaves a large amount of capital earning little, which is why return on equity was only 8.8%. Hirose's moat is not a single patent or customer contract. It is a vertically integrated operating system. Product design, die and mold development, process engineering, and volume manufacturing are kept in-house. That protects know-how and quality in difficult microconnector tiers. Automotive design-ins add another layer of stickiness because a connector specified into a platform can remain there for the model's life. The trade-off is cyclicality. The core multi-pole business still depends on smartphones, industrial demand, and capital expenditure. Management is beginning to address the excess capital problem. Hirose targets roughly a 50% dividend payout, added a 5% dividend on equity floor in May 2026, and authorized up to 60 billion yen of buybacks across FY 2025 to FY 2028. In FY 2026, it returned about 37.9 billion yen through dividends and buybacks, more than its net income. These steps can improve per-share value and returns, but the cash pile is still large, so delivery on capital efficiency remains a central watch item. Hirose's updated midterm destination is FY 2029 revenue of 290 billion yen, operating margin above 23%, and return on equity above 12%. The plan rests on three established pillars: consumer, automotive, and industrial, plus two frontiers: AI and optical transmission, and semiconductor test. The report's own base case is more conservative, at 262 billion yen of FY 2029 revenue. The important execution question is whether the high-growth segments can scale from a small base fast enough to change the group mix. The valuation is the hard part of this story. Hirose historically traded in a roughly 15 to 28 times earnings range, and at 26.7 times trailing earnings, it sat near the top of that range at the reference date. Net financial assets reduced the ex-cash operating multiple to about 21 times, which is fairer but not cheap. The market is pricing real strengths: AI and optical growth, semiconductor test, and stronger returns. The published 3-year scenario analysis makes the risk-reward explicit. The author's bear, base, and bull values for fiscal year 2029 are 14,843, 27,492, and 38,718 yen. These are estimates based on stated earnings and multiple assumptions, not price targets or promises. The base case implies only a modest price gain from the report date share price, because earnings growth must first catch up with the current valuation. A stronger yen, weaker AI demand, or a cyclical downturn could hurt both earnings and the multiple. To conclude, Hirose Electric combines industry-leading connector margins, deep engineering capability, and a fortress balance sheet, with credible growth routes in AI and optical transmission, automotive electrification, and semiconductor test. The research also makes the constraints plain. Its frontier businesses remain small, the yen and China can move results, and the shares already reflect much of the quality. Use the linked deep dive to review the sources and assumptions, and treat this as research rather than investment advice. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.